the auto major Maruti Suzuki did come out with its numbers, and a very good set of numbers rather coming in, and a big beat on the profit is what the company has registered versus our expectation of close to 3,087 crores. The company has clocked in 3,711 crores on the profit figure, so definitely a big beat on this particular number especially. And if we talk about the operational performance, that too is boring in line to our estimates, while there's a slight beat on the EBITDA number. If we talk about the EBITDA, that has come in at 3,996 crores versus our expectation of close to 3,800 crores, while the margins are steady at 10%. Do remember that on a YOY basis, we were already penciling in that the margins will take a bit of a decline on the back of the higher promotional cost and the back of the mix that the company will be having this time around maybe, and given the fact that the volume jump on a YOY basis was just 1%. So on the back of this, the EBITDA was expected to be close to that 10% mark. Other than that, the revenue number that has come in at 414 odd crores, a slight bit better, our estimates as well. So good set rather coming in from Maruti Suzuki. Deven, hi, good afternoon, and great to be speaking with you. And Deven, your first take on Maruti Suzuki numbers, though the margins are flat if we compare the margin figures sequentially, but a big beat rather on the profit figure. How do you believe the stock is expected to do?
Yes, I think the beat on the profit figure seems to be a one-off, and I think one needs to look at, that one-off item to get a real good handle on that particular subject. I think at this point of time, the details are not available in front of me. But certainly, I think if it is a one-off, then interpretation is required on that number. Margins on EBITDA front, I think, has remained subdued as expected. Maybe I think the newer models probably are taking toll on margins largely because of the fact that I think the promotional part of the pricing is definitely, I think, compelling them rather compromise some part of the margin to get the market share. But overall, I think this is a good start, at least in the first quarter. Maybe I think the second half could possibly go much better with the kind of money that the consumer is likely to spend, given the kind of purchasing power that has come to them because of the tax saving in their hands and the lower cost of funds.
All right, so that's the first take on the numbers. But yes, Deven, you're right that there is indeed a one-off where the other income has actually seen a good jump on a YY as also on a sequential basis. What I can see that the other income is over 1,800 crores, and that's a significant jump, almost double the number on a YY basis, and sequentially as well, a good uptick over there. And because of the one-off, we are seeing a beat on the profit figure as well. But Deven, if one really has to look at the pecking order with respect to the passenger vehicle companies, what your pecking order be like, given the fact that the M&M has delivered a decent set, while for Maruti Suzuki as well, no major disappointments rather, while for Tata Motors, they have announced a big deal today?
Well, I think the SUV segment within the passenger vehicles is definitely the one which is producing the better margins. And going forward, we believe that even the first-time buyers with a lower cost of interest fund available to them may probably want to go for, instead of entry-level cars, go for the SUVs in respective categories. So I think the likely performance of most of the passenger vehicle companies, is going to be better in the second, third, fourth quarter. Also the fact that the cost is under control, and as a result of which margins are appearing better or promising to be better in given situation in this coming quarters. So we remain relatively more optimistic about the possibilities going forward. And should the export related activity picks up, or it shows visibility to pick up, my take is that some of these companies would relatively price themselves better in the listed environment.
So that's your take on the pecking order within the auto space. But just want to get a little bit more sense on the kind of profit number we've seen both from M&M, from Maruti. It's a beat versus estimates. The upcoming festive season is also just around the corner. Do you believe that the auto sector is now, we can now expect some steady moves coming in from the auto space?
Indeed, I think you're absolutely right. In this festive season, with the higher amount of money available for discretionary spending, certainly I believe that the numbers will appear better. particularly for the premiumization strategy that most of the passenger vehicle companies have been following. I think for them it's going to be better. M&M clearly looks winner in this because I think they have got a good pipeline to execute with the higher amount of bookings that they have done, including in their born electric vehicles that they have launched. So from a perspective of looking at companies, I think M&M certainly remains, I think, more visible, more clear. Tata Motors, Maruti, both in particular, I think would be driven by the rural spending. Of course, Maruti has got a premiumization in the portfolio now with a good segment of hybrids. So from that perspective, they should be also showing relatively better performance. But surprise package could be Tata Motors if they end up selling more volume.
But Deven, with this, we'd like to thank you for taking the time out and speaking with us and helping us with the first take on Maruti Suzuki. So Maruti Suzuki trading flat as of now, but a mild uptick after that surprise coming in on the profit figure.